We're examining the latest updates with legal actions against crypto exchanges Binance and Coinbase. And let's take a look at latest updates from the Ripple case. Josh Frank joins us today. He is a co-founder and CEO of The Tide. Josh, welcome back to the show.
Thanks for having me on again. I appreciate it.
Let's start with Binance. So June 13th is, I believe, the day that Binance US is going to suspend deposits. Are they going to suspend withdrawals as well? Are they going to freeze withdrawals, do you think?
I actually don't know if they're going to be freeze withdrawals, but it doesn't seem like this was a Binance decision. It feels like it was more of a decision by their US banking partners, acting kind of at the request of the SEC to kind of disable deposits into Binance. But they are converting into a crypto-only exchange. So you'll still be able to use Binance. You just won't be able to, I think, deal with fiat currency. So we'll continue to operate as a crypto-only exchange, but obviously that really impedes their ability to expand and attract new customers, right? For everyone to start in crypto or to get involved, you need to start with cash, right? You start with cash, you onboard into the system and start interacting with crypto. So I think it's going to be a huge blow to them and to their operations, because of the actions of the SEC.
So on Monday this week, the SEC motioned to restrain or filed a restraining order against Binance. The SEC Monday tried to freeze Binance US's funds in a move that the company called draconian and unduly burdensome. This is a statement from Binance US. If the court does address the merits of the SEC's motion, it should deny that motion. The SEC seeks unnecessary and unjustified relief, far from requesting relief that is carefully calibrated to maintain the status quo. What can we glean from this newest development from the SEC? What are they trying to do?
Yeah, look, I think it's really important to separate out the Binance case from the Coinbase case because they're very, very different. I know we'll be talking about both. The Coinbase case is an issue of the SEC coming out and saying every cryptocurrency is a security, and therefore Coinbase operated illegally, buying and enabling buying and selling of securities without proper licensing, as a broker, clearinghouse, or there's a number of other things that they're alleging there. In the Binance case, they're actually alleging some pretty bad stuff. One of the things that they're alleging is that there was commingling of funds between Binance International and Binance US. They're also alleging the fact that, Binance acted, I think they said between 2019 and 2021, so it's not clear whether it continues to be the case, but acted similarly to what FTX did, which is, basically using customer deposits to trade. So I think it's important to, I think the Binance case can become, the SEC can't pursue a criminal case, but if what they're alleging is true, what happens in Binance can become a criminal case. So I think it's important to separate those two things out. The SEC is alleging a lot of stuff, so we'll see what is true or what is not true. But I think in that case, the evidence is very different than in the case of Coinbase, which seems to be more of a discussion. Whereas it appears that Binance, potentially was operating and doing some relatively shady stuff on their exchange, including being, their own market maker, trading against clients and using customer funds to execute and commingling across exchanges.
So far, have we seen any evidence surface of any of this or any of these allegations?
Yeah, I think the SEC has presented evidence on that. I saw on Twitter today, another example of it looks like the wallet that the SEC is alleging is kind of the bridge between Binance and Binance US has continued to provide stable coins to Binance US, which is being withdrawn by customers. So it looks like what the SEC is alleging potentially is still happening in terms of the commingling of funds. That's such thing we've looked into quite yet, but that's something that I was looking at on Twitter earlier today. So I think, the SEC has presented evidence of a lot of this stuff. And I think we'll start to see more criminal case. Start to see criminal cases against Binance and a number of other, cases present itself. I think this is the start, not the end. And Binance is clearly lawyering up in every way they can, hiring, folks with DOJ experience, hiring folks with SEC, CFTC, anybody that they can possibly bring to the table. But I will say that this is something that I think a lot of people in crypto expected and anticipated. I was speaking to a large number of US hedge funds, large traditional hedge funds that were anticipating this happening. And I guess the feeling on the ground is in any market, having one company with 90% market share, which Binance has, is not necessarily a good thing. Obviously, this is not good for crypto, at least in the short term, right? If these things around Binance are true. However, I think in the long run, if they are true, it's better that they get cleaned up. And it's better that we have a market with a number of participants with a more reasonable market share. So I think, no one is surprised by the allegations, against Binance, I don't think. BNB obviously got hit, and I think the alts got hit because they were mentioned as securities in the case. But I don't think that this was particularly surprising to anybody. I think there's always been some level of concern with Binance. But again, I think, we'll see the facts play out over the next, couple of years, probably. I mean, these cases are not, these cases don't happen overnight, as we're seeing with the Ripple, case. We're 4 years into it and we're still not at a conclusion yet.
Right. We're going to come back to the Ripple case in just a bit. But okay, so the people you've been speaking to weren't surprised at these developments. Were they surprised at this development? There's this act to fire Gary Gensler. So this was introduced. The SEC Stabilization Act, recently introduced by Warren Davidson. And Davidson said in a statement, U.S. capital markets must be protected from a tyrannical chairman, including the current one. That's why I'm introducing legislation to fix the ongoing abuse of power and ensure protection that is in the best interest of the market for years to come. It's time for real reform and to fire Gary Gensler as chair of the SEC. How much of this was a direct response to the allegations against Binance and the lawsuits against Binance and Coinbase, you think?
I mean, I think it's a response to that, but it's been ongoing efforts by Gary to really destroy the industry. He's clearly not acting in the best interest of consumers. There was a report that came out the other day which said about 5 million Americans have the majority of their net worth in crypto. If your goal is to protect retail investors, if that's what your job is as SEC commissioner, and you are trying to destroy an entire asset class where there are millions of Americans with their net worth in that asset class, right? I don't think you're acting in the best interest of the American public. I think there are certainly a lot of bad things that have happened in this industry. I think we need to take responsibility for that as an industry, whether that be FTX, whether that be Luna, whether that be any of the other ICOs and scams and things like that. And those things need to be cleaned up. And I think the SEC does have a responsibility of cleaning them up. But I think there's a difference between the SEC trying to do what's right and clean that up. I think pursuing a criminal case, the US government pursuing a criminal case against an exchange, if there's a real case, that's the right thing to do, right? But coming out and saying that all of these assets are securities without providing any sort of path to registration, without having any dialogue around that, right? That's trying to destroy the industry. And it's not like, he's saying, hey, come into my office, have a conversation with me, right? Brian Armstrong went on TV and said he's met with every regulator, including prime ministers and presidents, but he can't get a meeting with Gensler because Gensler doesn't want to meet him. The Coinbase has tried to go in or has gone in 40, 50 times over the last 3 or 4 years to meet with the SEC, and they're not providing any guidance. They're not helping. It's clear that he's not acting in the best interest of the American public. And it feels like there's an ulterior motive here. Because if you look at the video that was released last night, there's actually video of, Gensler coming out and saying, Ethereum, Bitcoin Cash, Litecoin are clearly not securities. 70+% of the crypto market is not securities. There was a video of him, that was surfaced a couple of weeks ago, talking about how Algorand was built by a Turing Award winner and that the next Uber could be built on Algorand, right? And so, the statements that he himself made in 2018 and 2019 and 2017, he's contradicting. Something has clearly changed there, right? Maybe it's the fact that he was buddy with, Sam Bankman-Fried, and he's friends with Caroline Ellison's, parents. But clearly there is a motive here to destroy the industry, right? And keep in mind, look, whatever you think about crypto, and I know you have some viewers from last time in the comment section that don't like crypto. Whatever you think about crypto, it is still a multi-$100 billion business. There are real companies in the US, companies like Chainalysis that are, helping governments track down, illicit activity and wallet movement in crypto. That's an 100+ million ARR business. Fireblocks is a real custodian with 100 million in ARR, right? There are real businesses in crypto. There are tokens. There are millions of people that use Ethereum. There are, tens of thousands, if not hundreds of thousands of developers building in crypto, right? This is an asset class and industry, that's worth, whether or not you think the market cap, that's public is the right number or not, is kind of irrelevant. It is a multi-$100 billion, business with hundreds of thousands, if not millions of, talented, people working and engaging in it. And he's pushing that entire business offshore. And we see that, a reflection of that. The UK Prime Minister came out literally yesterday or 2 days ago saying we are going to welcome crypto. The Hong Kong government came out and said, Coinbase, come to Hong Kong, come register. So, he's not acting in the best interest of the American public. We're going to lose the entire industry, just like we lost semiconductors to China, because of, really one man and potentially Elizabeth Warren being his wing woman, or him being the pawn of Warren trying to destroy the industry. I know that only answered half your question. The second half of your question is kind of on, the proposal that was put forth. Look, do I think that passes Congress? No. We in America, we can't agree on anything. So I would be shocked if that passes. But I do think this will be reflected in the election cycle, next election, right? The Democrats, which have primarily been the ones that are anti-crypto, though not exclusively, they've primarily been the ones that are anti-crypto. Their base is younger voters. Who do you think are the 5 million people that have the majority of their net worth in crypto? It's not the 70-year-old base that the Republican Party has. It is the Democratic base, and they are going to lose that base entirely with the actions that they're taking here.
If you look at Gary Gensler's professional history, he taught at MIT several semesters of blockchain courses. In fact, one semester is online on YouTube. You can watch his blockchain courses at MIT. He understands the technology. He understands the industry. Why would anyone think that he's trying to destroy this industry that he's obviously very knowledgeable about? Perhaps people have speculated there's other motives, political motives behind what's going on right now. Have you looked into this?
Yeah, I think it's a couple of things, right? I think if he was, the first thing is he said he's never actually owned or interacted with crypto. And I don't know how you could be an expert and teach a class on something if you've never, it's really not that hard to download a MetaMask wallet and interact with Ethereum and trade on Uniswap, right? Or even create a Coinbase account and interact with a token, right? So he's publicly said he's never done that, right? So I don't really know how you can be an expert at something that you've never even tried. It's really not that hard. You can do it in 5 minutes, right? We're not asking him to do months of work. But I think if he was acting on, if he was acting in the best interest of, or not even the best interest of crypto, if he was acting, with no ulterior motive, he would not take a regulation by enforcement approach, right? He wouldn't say, in a lawsuit against Coinbase, these 15 assets are securities, or, in other lawsuits, he's just throwing in the fact that assets are securities. It's not a conversation. It's not a dialogue. There's no path to registration, right? And crypto companies have been complaining about this for years, right? It's really just, hey, I'm going to enforce the law and come countersue me or come fight this in court, right? And the thing is, these tokens don't even have a chance, right? Take, for example, I think Solana as an example was mentioned as a security. It's not like they filed a lawsuit against Solana, which Solana can defend. They're just saying Solana is a security. And then all of a sudden, for example, Robinhood had to delist Solana and market sell all the tokens because, Robinhood doesn't want any more problems with the US, government more than it already has had in the past. Right. So, this is clearly not a, hey, let's have a productive dialogue and conversation. It is I'm going to do whatever I can to destroy the industry. And I think, look, I think there's different opinions on why that's the case. And I'm not suggesting that any of the opinions are my own. One of the opinions is that in order to get this position, he kind of had to align with the progressive left and with Elizabeth Warren. That's one of the opinions. Another opinion is that he is looking for, he has greater political aspirations, potentially to be Treasury Secretary, and he wants to have kind of a, something to point to on his resume, and that thing could be destroying crypto. I don't know. I mean, but it's clearly an ego thing because every time he comes out and takes some action against a crypto company, he does this ridiculous animated video that he posts on Twitter with a giant smile on his face, right? It's not. And if you think about it, I mean, crypto is so marginal, right? Even if you take the overall market cap of crypto, maybe $1 trillion versus the entire assets of the world, gold is what, $20 trillion. It is so marginal. And think about the percentage of the SEC's budget that they're using to enforce against crypto versus, on a relative scale, how small it is on the world stage, right? I think I don't think he's doing his job.
Let's move on to alt. So you brought up a key point. So Solana has been delisted from Robinhood. This comes as the altcoin market is getting slaughtered. Solana has been down a lot this week. A lot of other altcoins as well. Cardano. Solana's down another 25% on Tuesday today. Interestingly, Bitcoin down a little bit, but not 25%. It's down 1%. So Bitcoin has held up relatively well against the altcoins. And if you look at the Bitcoin dominance chart, it's up. It broke the key 49% level earlier this week. And so the question is whether or not the altcoin market is quote unquote dying. I've heard that term used on social media a lot because of what's going on and because everything is now classified as, I guess, a security except Bitcoin. So everything's going to be wiped out. Is this the end of altcoins?
No, look, it's not the end of altcoins. There is a lot of garbage, and I'm the first to admit that, right? There is a lot of garbage. 90+% of the assets that exist are garbage. They don't do anything. They provide no value to the world whatsoever. With that said, there are real technologies that have real developers that are building on them that have users. Right. I mean, stablecoin is an example of a great use case. And I think, I don't remember if we talked about it last time, but the idea that you can use it for cross-border remittances and payments, things like that, a huge percentage, for example, of, the supply of USDT is actually listed on Tron, right? So Tron is about 30 or 40% of, the market cap about 30 or 40% of the USDT supply is on Tron and on a number of other blockchains, right? So there are real use cases, right? The assets that are getting hit the most are the assets that have been mentioned as securities by the SEC. And the reason that they're hit the most is because now the US market is not going to have access to them. But I will say, Coinbase hasn't delisted any of these assets yet. So Robinhood has, and there are other platforms that are. They have not been delisted from Coinbase, and Coinbase intends to fight this. And keep in mind, just because the SEC or Gensler alleges that they're securities, they're still going to have their time in court. We're going to talk about the Ripple case, I know, in a bit. So look, I don't think it's the end of crypto. It's not the end of altcoins. Keep in mind, Andreessen just announced that they're moving to London, right? And the UK Prime Minister came out and made a public statement. Hong Kong has, is enabling firms to register as crypto service providers and exchanges there, right? They've already handed out a few licenses. They're planning on handing out more. They've enabled trading for retail investors. And if you look at the market, it's a global market. Right now, the Korean market itself does more volume than Coinbase does, right? So even within a single country, Korea, there's more volume than there is on Coinbase. So it's a global market. It definitely hurts. But I think, this gets sorted out. It gets dealt with. And the market recovers. Look, a lot of this stuff should go to zero and will go to zero, but there's real technology and there are real projects out there that I think will recover from this.
I think you're right. I mean, there's real projects and there's garbage. If you're a believer in free markets, the garbage will sort themselves out and be put in the garbage trash bin by themselves anyway, with or without government intervention. I think the fear here is that a lot of these projects that actually have real utility are also at risk because of what the SEC is doing. How significant is this risk? Let's take an altcoin with an actual use case. Let's take Ethereum.
Yeah, well, I don't think Ethereum. I mean, there's the Hinman's speech in 2018, which I know we're going to get into, saying Ethereum is not a security. The CFTC has come out and said Ethereum is a commodity. So even within the U.S. government, the CFTC disagrees with the SEC. I don't think Ethereum is at risk. Ethereum has been holding up very well. I mean, I was talking to one of my friends who went on vacation 2 weeks ago. Ethereum was 1850. He came back. Ethereum was like 1750, and he didn't really look. And then he started looking at the news. He's like, oh shit, what happened over the last few weeks? So Ethereum has also held up relatively well. I think the problem is more of these, alts that are, I would say, less decentralized, because they certainly are. They certainly have companies behind them and other legal entities, that are still helping to operate them, that have been listed as securities. I think there is more risk there. I think the bigger risk for one of those is that the price crashes so much and they didn't manage their treasury very well. And now all of a sudden they just don't have that much capital left that they can deploy. That becomes an issue for one of them. But a lot of these guys have a lot of these tokens, have billions in dollars on their balance sheet still, and they can put up a fight. I mean, Ripple spent $100 million fighting against the SEC, right? So I don't think the fight is over. I think it's just getting started. And there are a lot of markets outside of the U.S., right? I mean, the U.S. is 300 million people, and it's the largest financial market in the world, but it's certainly not the only one.
All right, so let's get into this Ripple case. I'm just going to read a paragraph from a Coin Telegraph article came out today. So the Hinman documents were unsealed today on the 13th. Newly released documents showing edits that were made to a 2018 speech given by former director of the SEC Corporate Finance Division, Bill Hinman, suggested the editors were concerned his statement might undermine the idea that Ether is a security. I'm just going to read part of this redaction, this edit. As above, we suggest deleting the sentence because of our concern that informational asymmetries likely do still exist in some form, even where an enterprise is decentralized.
Yeah, I mean, so there's a number of things that are worth looking into within that. And for reference, so Bill Hinman, as you mentioned, was at the SEC and gave a famous 2018 speech saying that the SEC are saying that Ether was not a security. In the SEC's case against Ripple, one of the big points that they've been bringing up is the fact that he was acting as a lone wolf. But if you look at the documents that were unsealed, there are, comments from a number of, if not dozens of, different senior executives at the SEC. So it's very clear that this speech was not a lone wolf. This was a collaborative effort among the SEC to make these comments. And so I think that is going to play very well in Ripple's favor. And if Ripple comes out and wins and is not a security, the market is going to absolutely rip. Everyone is going to think they have a case against the SEC. And the case that Hinman made was that something could start as a security, and then once it's sufficiently decentralized, no longer be a security. And it's clear that Ripple and others can make the same case and can argue the same thing. So this is, I think, though I think the merits of some of these things are still being debated, I think it's certainly a positive, in this case. And I think that's reflected in the fact that XRP continues to be, one of the best performing assets in crypto. It's up over the last day, 30 days, when the rest of the market is down, which signals the fact that I think there is a belief in the crypto market that the SEC, that Ripple has a very good chance in this case. And I think that opens up the door for a lot of other things if they win.
Ultimately, what difference does it make for the investor whether or not altcoins are a commodity or a security?
Well, I think the problem is if they are a security, right, all of a sudden they're not going to be available to trade on any platform. Right? As a security, there are disclosure requirements, and who is going to fulfill those disclosure requirements? Who is going to be able to list these assets? Right? There are not any exchanges. Coinbase does have a broker dealer, but the SEC can argue that these tokens aren't able to give sufficient disclosures. It can be a big problem for the American investor in terms of being able to access these assets if they're securities. We've seen that in the case of Ripple. Ripple is effectively no longer available to American investors because, since this lawsuit started, 3 or 4, whatever number of years ago the case was. So it's going to be a problem temporarily. And keep in mind that if the SEC does allege that they're securities, they haven't given anybody a path to register as a security. So they're saying they're securities, but then you can't register as a security. So really, there's no way that these assets will be, at least now, accessible to anybody. But the fight is just getting started. And there is an election that is going to happen very soon. And the SEC commissioner is a presidential appointee. So a lot can change between now and then. But certainly, if there are securities that can make disclosures, that can be registered, that can be traded on Fidelity, there is no difference, right? But right now, there's no path to that being possible, which is the biggest problem here.
So the TIE is a very sophisticated platform showing data from all corners of the crypto industry. What does your platform show in terms of capital flows in and out of the crypto industry right now? Is there a lot of fear?
Yeah, well, I think it depends on the exchange. Broadly, I think people have been pulling money from exchanges. But if you look at Binance, for example, outflows have net outflows, right? Which means net of inflows. They were very, very significant on day 1 of the case and day 2 and day 3, but they have continued to kind of decrease over time. We're seeing a number of exchanges that are still seeing inflows of capital, but I think it is good for people to have funds off of exchanges. You don't want, look, crypto is in a way, it's a libertarian idea, right? The idea of Bitcoin, right, is a libertarian idea. And so I think there are a lot of people in the space that believe in, self-custodying their assets, holding assets themselves. But, look, we saw that in the case when FTX happened. A lot of people withdrew assets from exchanges. A lot of those assets came back. We've seen temporary withdrawals of a large number of assets. I wouldn't be surprised if in a couple months from now, or even a couple weeks from now, we start to see a lot of those assets come back. But at the end of the day, less assets on exchange mean less assets available to sell, right? So it's not necessarily a terrible thing for the crypto market, but it also, means there can be less liquidity, and with less liquidity, you'll have more volatility and potentially, more significant price swings.
The clients that you work with and the hedge funds that you've interacted with, are they concerned about excessive fear basically wiping out certain corners of the crypto markets and those corners never coming back?
I don't think so. So I think it's important to kind of describe what we mean by like an institution in crypto and who we're talking about. I think there are a lot of folks that are scared of the SEC and are ceasing to act in or to participate in crypto. Those are primarily US based funds that don't have an offshore entity. With that said, there are a large number of funds, especially proprietary trading firms, that do have offices offshore. Those guys are not stopping any of their activity. It hasn't really changed. In some cases, it's actually picked up more. But I think there are a number of barriers to entry for these institutions that exist right now. Right. Obviously, the regulatory uncertainty is a big part of it. Another part of it is there's a concern around exchange. There was a concern around Binance before this. Right. There's a concern of like, okay, who can if I'm a New York based fund, who can I trade with? Right. There are not very many liquidity providers out there. The credit market is really stalled. I think what we'll see is, there are a large number of venture backed companies that raised at ridiculous valuations with no revenues. Those guys are going to go away, and they should go away, right? VCs need to be right 10% of the time, not, 50, right? And so I think there'll be a lot of stuff that's washed out. But I think the reason that this is different from, I've been, in crypto full time, for 6 years, right? The reason this feels different than 2018 and 2019, everyone then was saying crypto is dead. But if you step outside of the US, I'm in London right now, there's actually excitement here, right? The the FCA just gave a license to Bitstamp, which is a crypto exchange to operate as an FCA regulated exchange out of the UK today. That just happened today, right? We have Mika in Europe that's introducing, pro crypto regulation as well, or at least guidance. There are a number of other regulators out there globally that are introducing, regulation to help guide the crypto industry. So yeah, within the US, it's bad, but I think, there is a lot of support globally, in Dubai and in the Middle East as well, where I don't think there's a concern as to whether or not the industry will continue. Look, I think there are a couple big tokens which will probably go away. There are a lot of small tokens that will go away. There are a lot of companies that raise at giant valuations that are going to go kaput. There are funds that are going to leave the space. It's not going to be a great next 6, 12, 18 months. But I think, I don't think there's a concern as to whether or not there is a long-term continuation of digital assets. It's just not going to look the way that it does today.
Final question. So evaluate this statement. So you brought up the fear that crypto was dead. We've been hearing this a lot over the last couple of years. In the US, at least, there's this belief that should Binance go under, I'm not saying CZ is guilty of the allegations. I'm not saying Binance will go bankrupt. I'm just worst case scenario, hypothetically, if Binance goes under, crypto will actually be dead because the largest exchange going under would signify a complete lack of confidence in the industry. Please evaluate that.
I don't think so. FTX was up there with Binance, and where Bitcoin's price is up 40% year to date. Ethereum is up year to date, right? Despite this, Bitcoin is holding up really well. Ethereum is holding up really well despite these issues. It would not be good. I'm not suggesting it would be good if Binance went down. But there are a lot of other things that exist there. Coinbase is a publicly traded company in the United States that make billions of dollars. There are a large number of other exchanges that exist out there. It would not be good. There would be problems associated with it. But I think that we're past the tipping point, right? I think there was a great tweet that I saw from one of my friends, Jonah Van Borg, who's the head of trading at Cumberland. where he said, tell me another bubble in the history of bubbles. Everyone talks about crypto being a bubble. That when the bubbles popped, is still $1 trillion asset class. Crypto still has a $1 trillion market cap, right? Despite all of the setbacks, everything that's happened, there are still billions of dollars in dry powder that needs to get deployed into the space, right? And Andreessen raised $4 billion. That certainly all hasn't been spent. PD Hawn's fund, Hawn Ventures, raised billions of dollars that hasn't been spent. There are a large number of venture funds out there that are sitting on dry powder that needs to get deployed to crypto. There are regulators globally that want to usher in this industry. Look, I'm not saying things are good. Things are not good. Things in the US are really bad. It's bad for the industry. I'm not saying prices going up in the next 6 to 12 months. That's not the statement that I'm making. But I don't think crypto is dead. I don't think this is the last end of crypto. But I think, honestly, if Binance goes down, it's probably really bad for crypto for 12 to 24 months. In the long run, though, and I'm not suggesting that anything that's being alleged against Binance is true. I don't know the facts. I've been a user of Binance. I think it's a good product. This is not a personal comment, but I think in the long run, a company that has such a large share of the market, going down and demonopolizing the market is a good thing, right? It would be great if there were 10 exchanges that each had 10% market share, because if any one of those things go down, you no longer have key man risk with one of the exchanges, right? And so, I think in the long run, having more platforms, having more availability, and having more diversified market share is only a good thing.
Yeah, well, consumers vote with their wallets, pun intended. So there probably was a reason why Binance was number one, but we'll see what happens going forward. Finally, where can we learn more about the TIE, and what can we expect from your work going forward?
Yeah, so you can follow us on Twitter at the TIE.io. We publish research. We publish, I host a podcast, which I bring on some institutional guys. Sometimes I don't really do it regularly, but whenever I get a chance, we're doing webinars and calls with tokens. What the TIE does broadly, we're the leading provider of data to institutions in crypto. So, we have a platform that aggregates market, derivative, sentiment, on-chain news, research, private company data, you name it. And we service a couple hundred of the largest institutional clients. I understand that not every listener is an institution. We will produce free content for those that aren't institutional. But if you are institutional, you can visit our website, thetai.io. You can reach out, book a demo of our platform. Doesn't cost anything to see it. So book a demo, and we'd love to show it to you.
All right, we'll put those links in the description down below. Thank you very much for your time today, Josh. Very informative interview. Appreciate it.
All right, thanks for having me on.
And thank you for watching. Don't forget to subscribe.